February 1st, market analysis, Stan Ehrlich. Good morning. Almost 10 o'clock California time, just a little bit past the middle of the regular historical trading day. Here in California, 6:30 to 1 o'clock in the afternoon. We have a fairly strong E-mini today. I start out with the stock market indexes, as you probably know. Yesterday, just after my YouTube, the market continued to fall apart and drop all the way in basically one single day below the lows of the prior, what was that, 6-7 days of activity. 1, 2, 3, 4, 5, 6, 7. Yep. And close below the previous 7 days closes. That's a pretty big break, especially these days when we're not seeing typically more than 2, 3, maybe 4 or 5 points up or down on an average day. Obviously, in past time periods like COVID crash, we would see much, much bigger ranges on a daily basis because of the panic situation that was developing from February 20 to March 20, I believe, of 2020. So, is that it? Is that the bottom of the break I was expecting and talking about for well over a week? It almost got to my minimum downside objective, which is the support area, but it didn't. It did trigger off some more overall bearish signals, so I would be expecting to see more weakness. But remember, in the first place, it was supposed to be a short-term downside reaction into support and then climbing back into new high ground for the major long-term bull trend, which I am very much in favor of. I'm bullish intermediate to long-term, but the question at the moment is, was that the end of the minor reaction I was expecting, which happened very sharply and very quickly? Well, I'm not so sure that's true. So this rally today, although pretty good, I think might fail, and we'll see lows lower than today's lows and lower than yesterday's lows. But again, I'm not really bearish. I'm looking for a little bit more downside correction in this longer-term bull trend. Let's look at the next chart. And by the way, the downside objective in the E-mini, 48.40, and maybe down into the range of 47.25-ish, give or take, 5-10 points or something. But that's not my favorite objective at this particular point. I'm looking for a mild, modest, and I got almost all of it yesterday. So let's see. Spider, inside trading day, doji, doesn't mean too much, no higher, no lower, but the spider left a small gap behind yesterday when it gapped down and just started a breakdown. So essentially all the other comments are the same. I am looking for a little bit more of a downside correction here on the spider down to about 478 or so, with the possibility of it getting to the bottom of the December, early January, or I could say now January, because this is February 1st, lows. And that would be in the area of 468. We got a few lows in that ballpark, so good support in there. Now, very skeptical about today's rally, therefore. Next, 1 minute spider, pretty strong spike up a couple of times here, but that doesn't change my opinion. This is a 1 minute chart, and this shows you what happened yesterday when it opened, had a little bit of a rally, started to slide sideways most of the day with an attempt to make new highs, came very close. And then all of a sudden, probably some sort of bearish news or lack of bullish news, it mounts up to the same thing. And down we went very, very quickly and sharply, and closing right on its lows on the closing tick. So this morning we opened a little higher, and here we are, slipping momentarily. While we're looking at the numbers, we're up almost 4 points in the spider at the moment, 2.5 in the DIA and 3 on the Qs. So remember those toward the end of this YouTube. Next chart, DIA. Yesterday we had our first bearish engulfing in a while. The last one was, and it didn't work, on December 20th. So there was a small loss on some of the trades, not all of them. The ER1 scalp looks like it would have easily made a good profit, but that was just a scalp. And the others, probably not. All right, so what do we got? A brand new sell signal yesterday, and that developed after I finished my YouTube because of the break that happened. Now today we have just managed to come back up to the ER3 new short sell signal red dots. So we're short at a tiny bit lower than we are right now, and we'll see what happens next. I'm now set for the DIA and therefore probably the other indexes to drop down again, and that's exactly what I'm looking for. And that would be to about 377.5, and for the DIA maybe 371. Next chart. The Russell 2000 is not the same thing and has not been the same picture as the other indexes for quite a while, a month or two. It got up into new high ground for a little about a year, got overbought, and that was around December 27th. So for the month of January, basically, until January 17th, it dropped down, closed an old gap, came back to support, got oversold, and now we've seen a rally past tense. Yesterday's break was very substantial. The high yesterday was 198.94, while the high the previous day, 198.93. That means just barely by a tick, we have a bearish engulfing a bearish engulfing candlestick, but because it was not overbought within the allotted amount of time before the signal, we don't have a red bearish engulfing like we do on the DIA, the Dow Jones. So some reasons to believe I'm expecting more of a correction, especially the DIA and the others as well. I think we're going to come back down to 188-ish. And for the Russell, that just might be it. It might start holding better, quicker, sooner than the other indexes before everything turns back up again. Okay, so the QQQs left a very small gap behind yesterday. Gaps are almost always closed, but not necessarily immediately. There's nothing really wrong with it going up right now and closing that gap, getting a little bit above yesterday's high, and then slipping back to new lows for the last week and a half or so, or just plain doing it now without closing the gap. There are two small gaps to close, and one of them occurred the day after January 17 and the day after January 18. And they're in the ballpark price level of exactly what I'm expecting, a test of previous highs, or maybe a little bit lower. So, a variety of reasons to look for lower levels on a short-term basis, and many, many long-term reasons to look for major new highs, probably during February, maybe the last half of February. Next chart is the NASDAQ futures contract, NQ, March, and it almost got to my objective yesterday, but I am looking for a little bit more short-term downside weakness. Okay, futures. Now, the E-mini, a little bit different perspective. And by the way, guys, you can contact me at info@ersignals.com. The company email address, info@ersignals.com. Well, of course, we got the same exact rally you saw a little bit ago, and it's an inside trading range day at this point, a doji, but no faith in this rally, frankly, and I'm not real bearish, remember, just modestly. What about the NASDAQ? It's the same thing I just mentioned a few moments ago. Back to support, 17,153.5 appears to be a very likely spot for it to stop dropping, and maybe down to, I'll say 16,700, and a chance you're going to get back into the support area. Not really expecting it to drop quite that far, which is not a really big dip anyway. Okay, so bonds. Now, as these markets are rallying, bonds are also rallying, but they have been rallying for the last 4 days, during which the indexes dropped like a rock on yesterday in particular. So they're a little out of sync here. Normally, interest rate futures are trending upwards, and I hate people to use that word because trending, you need to define what time frame you're talking about. I'm talking about the last 4 or 5 days of sharp rally, but also I'm talking about since October. So the trend is up since October. I'm being very specific. And then there was a correction middle of December to middle of January. And now a sharp rally for a few days, but we're getting overbought. So that implies we're about to start slipping. And if it does, that's going to help the indexes start to slip a little bit more, I would expect. Next chart is the 10-year notes. And now we have a minor double top possibility right up against the previous highs in mid-December, December 27th, the end of December. And let's see if that does stop it and turn it back down, which would agree with my short-term minor dip a little bit more so in the indexes. So they could begin to fit, both starting to come down a little bit very, very soon here. Okay, crude oil. Well, overbought almost at resistance, turned it down, and we now have another set of new lows, some probable new low close. Momentarily, we're between a rock and a hard spot. And I'm thinking that support area, which is very substantial and profound, is going to stop it from dropping again. But it won't stay that way forever. And when are we probably going to drop into new low ground for many months? I'll have to try to figure that out as we're dropping into this next support area. So certainly 73 down to 68 is definitely expected. Next. Natural gas, almost an outside down day today. Today's low so far is 2.034. Yesterday's low is 2.037. So we do have a bearish engulfing. You can actually see that the high is a little bit higher than yesterday. I didn't need to give you the exact prices. So we have a bearish engulfing. That does imply all by itself that the market is going to start to slip some more. Doesn't tell you how far, doesn't tell you for how long. But a little bit more of a slip is going to break into new lows, hitting stops, and perpetuate the longer-term bearish expectations, which is exactly what I have to say. So I'm looking for a challenge of 1.835 and probably lower. Next, heating oil. We have an outside down day today, a bearish engulfing brand new signal today. So keep your eyes on heating oil in the next few days to maybe several weeks, because this is the signal I need in order to tell you I'm starting to get immediately bearish, probably down to new low ground below 2.4 and the lowest low 2.42 for many months since July. This is the kind of signal that can and often does, not always, cause a move down of substantial amount. So keep your eyes on heating oil turning bearish, official ER sell signal in progress. All it has to do is stay lower than the previous day's close today, and I will maintain that red bearish engulfing. Next chart. Well, we have a bullish engulfing, but no buy signal in gold, but it's bouncing off support. And in the last couple of weeks, it bounced up out of a support area very handily, so to speak, if that's a word. And we have a minor double bottom in the process. So I expect to see a little bit more strength here short term. Probably a test of 2117, and we'll see what happens after that. Remember, we are very, very close to overbought already. So that could stop the rally about where it stopped before in overbought conditions and drop it straight back down again. Next, silver. Looks like it's bouncing out of support. That implies a little more strength. Not quite any kind of a signal today of any sort. Neutral. Maybe we'll get a little more rally out of this. Next, platinum. Bouncing out of support, but not very handily. Still lower in the day, a chunk. Not sure what to say about platinum at the moment. Next, high-grade copper. The trend line stopped the rally. Got through it a little bit and also came very close to the resistance and then closed even lower on the day, let alone below the line as well. Dropping more today, no surprise. How much more can we see on the downside? Well, let me comment about the RSI. It almost got, and it did get up to yesterday, 4074.77, super close to overbought. Not quite. did not have a bearish engulfing, so there was no official sell signal even possible because of no lower than the previous day. But we're between a rock and a hard spot. Why wouldn't it come back down again to 3.7? I don't see any reason why not. Exactly what I'm looking for. Next, soybeans have dropped now down to the ER3 green dots. We just barely missed it yesterday by a penny and a fraction, but now we've got it. We're long beans at around 1205, and small loss momentarily. Our fail-safe stop is 1187.5. Probably going to raise that stop very soon automatically because these are automated trading systems. And we'll see what happens now. So we've got our signal 2 days ago. Looks good. No problem with that. Came up a little bit yesterday. Dropped back down, which I really wanted in the first place in order to get long the ER3, which we now have done. So now all I want is a rally. Period. The more it sinks, the more concerned I get about it, but that doesn't make it, it doesn't cause me to change my mind. If I get stopped out, that would. Let's watch beans very, very carefully here. Bean oil trying to hold, oversold a couple of days ago, not doing a great job of it at the moment. Possible new low, close will move down, but not a new low. Maybe it'll start to bounce. Really can't tell. It doesn't look like it's going to happen at the moment. But I do like that oversold condition 2 days ago, and we have had higher lows since, even though we're right close to it right now. Next chart. Live hogs. Okay, resistance stopped it, an overbought condition the last 3 days, including today. And it was overbought 3 days before that for the last 6 days total. So certainly looks like we're starting to slip and come out of almost that resistance area. So my first downside objective was 78 and change, and then down to challenge the lows here for the last couple of months, around 73. Next, cattle. Well, the resistance ends up not stopping like it tried to for a few days, the rally. So here we go. Probable new high close, but not quite a new high ground, which is what I really want and need to perpetuate an up move. Problem is this overbought condition. So that could lead, and it hasn't quite yet, to a little tiny double top over a few days. That's a possibility. Not going to say much more than that. I want to see if it starts to fall apart back down again or plow through that previous high and pop up. If it does pop up more, we're probably going to 85.6 and maybe even higher than that, 88. But I don't like the fact that it's overbought. Not terribly, but any overbought condition does cause me to be very cautious about any further strength. Next, wheat. Neutral, sideways for a couple of weeks here, most of January, frankly. And what do we got? Nothing. And if you look back, we're actually in the same approximate price range we've been in since the end of September. So it's October, November, December, January. That's a third of a year. And the highs have been mostly around 640 and a little bit lower. And the lows have been 550 and a little bit higher. And here we are. What can I say? Nothing. Next. Bullish engulfing ER buy signal 2 days ago in corn. Yesterday we missed by a penny or so. Today again we have missed by a penny and a fraction at the low of the day, almost touching my green dots. I'm concerned that I might miss this trade and it might go straight back up again, but never make the market do what you want it to do. You always have to go with it. So we'll see what happens next. I'm bullish on corn. Meal, bearish engulfing today. Probably going to start slipping again because of the bearish engulfing. It's not an official ER sell signal. This time down, we'll see if it can break below, stay below, and close a new low ground below that trend line. that would probably cause it to come all the way down to 336. And that is a major at 334 support area going back a year. You close below 334 on this soybean meal continuation contract, and you've got yourself another big leg to the downside, probably. Next, overbought conditions now for the fourth day in a row, very strong, 4 days in a row, OJ. But again, I think we're getting very close to topping out, just like I was saying for a week or so in the stock market indexes. Then all of a sudden yesterday goes slam dunk. So not surprised if OJ doesn't do it very soon. Looking for a move down of some consequence here. Next, I have to say the exact same thing for cocoa. Last sell signal didn't work very well or at all. Plowing in a new high ground, overbought, getting up to not too badly 82 on the RSI. And again, the RSI is a custom RSI. It doesn't look like it, but it is. We learned RSI from Wells Wilder himself in the 70s, 80s, and probably early 90s. And we'll see what happens next. But I cannot justify going long at these levels. I can justify, if you're long, raising your protective sell stops significantly tighter and looking to take profits on long and looking for new short sell signals. Next, coffee. Is this head and shoulder top going to make it? Well, it sure is playing games with me. I don't like the fact that it's been going sideways now for well over a week, almost two, while the first shoulder, if it's a shoulder, was a very simple rally and drop right back down. Classic. The head, basically the same thing, and overbought for both of those. But here we are building some sort of sideways with a little bit of a bullish tinge to it because you got a little bit higher highs and a little bit higher lows. But I have to see this thing drop and drop real darn soon before I completely abandon the possibility of it building a last shoulder, which is pretty fat already. Don't really like the way it looks a lot, but it just might still work. Watching closely. Next, sugar to sweet. Bearish engulfing on this continuation contract today. Brand new sell signal. In the next few days, we can come back up to the red dot and get short the ER3. ER1 is short right now, just a little bit under yesterday's low with a small profit as we speak. And I'm looking for significantly lower levels. This actually has some very small characteristics of a teeny weeny head and shoulder top. And there's your neckline drawn across the two lows. And so there's your rally high and low afterwards. There's your head on the rally 2 days later that I told you was very small. And 3 days after that, the low for the pivot point. And 2 days after that, here we are with a minor new high for a couple of days. That's all it takes in this very small pattern. And I'll be damned, a bearish engulfing ER sell signal at the last part, if the pattern's good, and it's a very small one. I'll eyeball this real quick. The downside objective should be in the ballpark of approximately, well, how about that? Back to my support level here, about 22.25. Huh, pretty nice. I'll have a official objective for you in a day or so. Now I want to see it close below the neckline. And it should do it in the next day or two, real quick, because it's a very small pattern. You can't go sideways any number of days to speak of, and you should not make any new highs higher than today's high. It's pretty much simple, straight down from here, if it works correctly. And caught in the rag, blasting off again, getting overbought again. Remember that my sell signals, although that worked partially, we're able to make some profitable trades with that signal. It didn't work for a longer term one, that's for sure, but overbought again. So I am still thinking that cotton is in the process of topping out. The ER sell signals and buy signals are not necessarily, although very often, the exact high or low of some major swings and minor ones, but they're also part of the topping out or bottoming out process, while not the highest high or the lowest low. So that's what happens with the red and green ER sell signals and buy signals. Next, we're back to the E-mini. Looks like it's easing back very slightly, if at all. So it got stalled out here. I'll leave you with that. Watch carefully for this rally today to, I think, slip back and start to fail. Have a great trading day. Sayonara. Hasta luego. Talk to you later.